Have you ever wondered how professional traders identify when a trend is set to continue? In today's video, we're diving into one of the most effective tools in a trader's arsenal: continuation patterns. These chart patterns reveal the market's pause moments before a trend picks up again, giving traders powerful insights into entry and exit points. Stay tuned as we break down the most common continuation patterns and show you how to use them effectively, so bring your notebook and take all notes. Introduction. When trading, understanding continuation patterns can be a game changer. These patterns signal that a trend is likely to continue after a pause, giving traders the chance to re-enter the market or stay confidently in their positions. From bullish to bearish setups, these patterns reveal market psychology during consolidation phases. Today, we'll explore the most common continuation patterns, how they form, and how traders can use them to make informed decisions. Key features of continuation patterns. Continuation patterns form when the market takes a breather during a trend. They represent a battle between buyers and sellers before the dominant side takes control again. A key aspect to watch is volume. It often decreases during the consolidation phase and surges when the breakout occurs. These patterns work across various timeframes, from intraday charts to longer-term setups, but their accuracy depends heavily on proper identification and market context. Explanation of each pattern. Flags, bullish and bearish. Flags are small rectangles that slope against the prevailing trend. A bullish flag forms during an uptrend, sloping downward, while a bearish flag slopes upward during a downtrend. Breakouts usually happen in the direction of the initial trend. They are quick to form and provide clear entry points. Pennants, bullish and bearish. Pennants look like small symmetrical triangles and form after sharp price movements. A bullish pennant occurs in an uptrend and a bearish pennant in a downtrend. They signal continuation once the price breaks out of the triangle's narrow range. Triangles, ascending, descending, symmetrical. Ascending triangle. Bullish pattern with a flat resistance line and rising support, showing buyers' strength. Descending triangle. Bearish pattern with a flat support line and falling resistance, showing sellers' strength. Symmetrical triangle. Neutral pattern that breaks in the direction of the dominant trend. Wedges, rising and falling. Rising wedge. Forms in an uptrend or downtrend, sloping upward and often breaks bearish. Falling wedge. Slopes downward and signals a bullish breakout, typically in an uptrend. Rectangles, bullish and bearish. Rectangles form when the price moves sideways within a range, bounded by parallel support and resistance levels. A bullish rectangle breaks upward, while a bearish rectangle breaks downward. Cup and handle. A cup and handle pattern forms during an uptrend. The cup is a rounded base and the handle is a small consolidation phase. A breakout above the handle's resistance signals strong continuation. How to trade continuation patterns. Trading continuation patterns requires patience and precision. Entry points. Enter when the price breaks out of the pattern in the direction of the trend. Stop loss placement. Place stops below the pattern's support for bullish patterns or above resistance for bearish patterns. Target levels. Calculate the height of the pattern and project it from the breakout point to set realistic profit targets. Mistakes to avoid. Misidentification. A flag can look like a wedge if not analyzed carefully. Always confirm with volume and trend direction. Ignoring volume. Breakouts with low volume are more likely to fail, so use volume as a key confirmation signal. Overtrading. Not every pattern guarantees success. Combine pattern analysis with broader market trends and other indicators. Conclusion. Continuation patterns are valuable tools for traders to capitalize on trending markets. By understanding how they form and how to trade them effectively, you can enhance your decision-making and stay ahead of market movements. Remember, practice is key. Study charts, test strategies, and refine your approach. If you found this guide helpful, don't forget to like, share, and subscribe for more trading insights. From flags and pennants to wedges and triangles, These patterns are the secret weapon for staying ahead in trending markets. Remember, practice makes perfect. Study these patterns on charts and refine your trading strategies. If you found this video valuable, don't forget to hit the like button, share it with fellow traders, and subscribe to the channel for more trading tips and strategies. Thanks for watching, and happy trading!